Welcome to Ahead of the Curve. Subscribe now.
Welcome to Ahead of the Curve 1776. It's me, Mr. Curve. Let's get straight to it, guys. Thank you for joining me today. Hope you guys had a excellent Good Friday as well as the short trading week. You guys wrapped that up, tended to everything that you guys needed to stay ahead of the game and ahead of the curve. Here's the videos down here, guys. Please like, comment, share, and subscribe on every one of these videos. Also, click the join, $5 a month, guys, to support the page. It is definitely needed and appreciated. Also, the Patreon, there's a $5 subscription over there and a $25 subscription. You'll definitely get more than you need to get yourselves ahead of the game, making sure that you're staying abreast, also doing your own due diligence, and a combination of those two. Maybe you're able to do something in the markets. Also, head on over to my link as well, too. If you're not in the game for Robinhood, make sure you do your due diligence there. Webull as well. EToro, FX choice for contract for differences, which is Forex, commodities, particular stocks for the contract for differences, as well as eToro for crypto trading as well, guys. If you're new to the channel, we talk about everything from economic data, monetary policy, politics, market, and trading strategies. Big thumbs up to my 5.65K subscribers. I appreciate each and every one of you. Also, check out the feature pages down here. They keep me up to speed on what's going on economically as well. So let's get to the money and let's get to the markets. Quiet.
You lie.
So that was the week, guys, for the economic data. Kind of a little bit of back and forth as far as the data. Kind of mixed overall, although leaning more towards dovish data. We're going to see definitely how next week plays out. The dollar lost a little bit of steam. We breached certain psychological levels for certain commodities. Plus, we did have a lot of geopolitical turmoil in the background leading the way for a lot of this. So we will definitely look into the week ahead, and then I'll tell you what I think possibly may come up there. Now that we got the pagan/Christian holiday out of the way here, we are definitely going to be taking off here. We're going to see volumes increase. We're going to see pretty much a full trading week, despite the Bank of Canada interest rate decision on Wednesday. Might be a slight lull there, but we're going to be pretty much full steam ahead starting the Asian session tomorrow. As you guys can see here, we're pretty much going to be underway here. We will still have certain banks recognizing the Easter holiday, so we will still see that New Zealand, Australia, there are going to be virtually no liquidity there. And then also the two pendulums or the two pillars that typically need to be trading in Forex or in the markets in general is the UK and US. They do hold a substantial amount of the volume there. So, this will probably be a non-event for Monday as well. We'll probably start to pick up as the day proceeds, and then when we're getting to the Tuesday morning for Asian session there. But all in all, guys, we still will have a lot of activity that's going to be released. We are out of the tomb sweeping moment for last week for China, so they will definitely be at play as well in these markets. And then also we got Tuesday, a lot of people speaking there later in the day. This is kind of a non-event for the most part, but we typically see the highest influx of volume on Tuesday compared to a Monday. It's almost double the volume, so we'll definitely take a look at that. We also got the CPI reading on Wednesday. We got the CPI reading there. 5.2 is what they're expecting year over year. Definitely a cool off from the 6 handle, but we'll see how that plays out. And then we're going to take a more keenly focus on the core CPI, see if that's coming down like we've kind of seen it come down a little bit. It only ticked up a little bit for last month. Then we'll have Governor Bailey. He'll speak as well. And then we'll also have the interest rate decision. So we got a lot going on here, guys. Wednesday we'll definitely have a lot of capital on the sidelines. We're kind of expecting a dovish stance. We're probably going to get hinted at just a pause for now, and then they're probably going to be a wait and see approach. It probably will overall maybe have hawkish tones for the Bank of Canada, but overall, with the interest rate being what it is, kept the same, it's going to be viewed overall dovish. They may try to come out with the idea of a hawkish stance, but it will probably be interpreted as dovish. We'll also have crude oil inventories, guys. I'm expecting a negative reading there. And then we're going to have the press conference at about 10 o'clock here, 11 Eastern. 10-year bond auction, we're probably looking at about a 4 handle on that guy. We might see 3.9, maybe a bit to cover 2.5. We're also going to have the FOMC meeting minutes. We're going to get a little bit more insight on how they came to that quarter point hike a couple weeks ago and where they see things going. That positive data that we just had, let me go back here, guys. I think I kind of breezed over that, but we'll go back here for Friday. We had that employment change there, which was crazy, guys. We had, Canada posting good numbers, and then we had the U.S. essentially posting decent numbers. So one thing I noticed, though, they just keep lowering the benchmark lower and lower to kind of meet that threshold, so that way we get a very hawkish or strong dollar reaction. We had the consumer credit, though. I knew that would probably, tank for the month over month, 15.3 billion. So a lot of lenders as well as consumers are not taking out as much credit as one would like there. So I think that number is going to constantly decrease, probably getting to about the 10 billion at some point. Let's scroll down here, guys. Let's get back to where we were. Yeah, we had that FOMC meeting. We got that going on Australia. I'm looking for a lot of volume about that point as well, too. Probably be buy the rumor, sell the fact. Probably a lot of trading will happen about 7 to about the 8:30 mark. We'll get the numbers, and then we'll see whether the trade will continue. For further insight, guys, get over to my Patreon and get on the $25 subscription to learn more as to how the markets work and how how you can utilize it to best suit your strategy. We'll scroll down here. We got the producer price, so we got the consumer price and producer price on Thursday. Unemployment claims got that high indicator. We also have Governor Macklem is going to speak as well. 30-year bond auction, and then we're going to top it off the week with the core retail sales and then preliminary at University of Michigan. Those are going to be two pivotal points because we are a almost 70% consumer-driven economy. So for this, that's going to be monumental. This is going to basically tell whether or not we are pretty much officially in a recession despite nominal terms. So we'll look at we're looking at readings of negative overall, which will probably be the second consecutive month. And we had 2 consecutive months at the beginning of last year, end of last year and the beginning of this year. And then we're also going to really take a focus, even though this is a light indicator, capacity utilization rate. That typically will show cooling off as well, too, as we kind of seen here. And they're expecting a little bit higher reading. I'm not expecting. I'm not sure, who surveyed for that. And then we'll have the IMF meetings for the weekend there, guys. So it'll be a pretty turbulent week, to say the least. We'll start off very sluggish to start the week. No volume there. We'll pick up Tuesday for sure. Everybody will be back at it, trading, investing, doing what they do to make money. And then we'll see a little bit of a lull for the CPI number. We'll probably get some influx there. But what I'm expecting is for this, probably a strong dollar on that Wednesday. Based upon how everything has been laid out on the table for this current year and trajectory, I'm thinking that we're probably going to be better than expected numbers for CPI, which is going to be strong for the dollar. And then with the Bank of Canada leaving rates the same, as well as what will be viewed as a dovish statement and press conference, and then followed by that up with a stronger than expected minutes from the Fed, I'm expecting probably a very strong dollar there. So we're probably going to have a overall pullback. Remember, guys, everything is valued in dollars for now, right? We'll see how long that plays. But basically, everything is valued in dollars. So we'll have to see how that works. So if we're getting a stronger dollar, that means that that's going to put pressure on stocks, right? Stocks won't be on a risk-on sentiment. There's going to be, putting pressure on certain bonds. We're going to see yields rise. We're also going to probably see certain commodities not fare as well with the risk on sentiment. So make sure you're being mindful of that. All of these things have the inner workings of trading, guys, or / investing. Then we're going to look at that Australia number. That's going to be huge as well, too. They've actually been doing pretty well. Had a couple negative readings, and it looked like they're getting back to it. So they're definitely weathering the interest rate decision hikes a lot better than the consumer-driven nations. But then we'll see these producer price index. I am expecting a little bit of a beat on most of those. I mean, look at this guy is pretty much negative, and I'm expecting a little bit of a beat. So all in all, guys, that is the week ahead for economic data. Probably overall a strong dollar unless something crazy happens or we get into some more geopolitical turmoil, right? That might be the headline risk, as we call it. So let's get you guys now over to the euro/US dollar, the most liquid pair in Forex. 1 hour chart for this guy. We started off the trading week at on the 3rd. We had about 108, shot up to almost the 1010 mark there, just a little bit shy of that, and then we kind of pulled back a little bit with that stronger dollar, which I can basically tell you we had the risk on sentiment for basically Tuesday and Wednesday, and then we had that stronger dollar due to certain reports. Why we had this one, I'm gonna guess, was basically just a sell-off. I mean, people did sell off into that Wednesday, and then we had Thursday, kind of a little bit of a little risk on due to the data that was released, and then we kind of obviously pull back. What I expected overall, though, was a softer week for euro/US dollar, which would have been a stronger dollar there, but we did lose a little bit of steam there, and I just think that we had higher than anticipated trading than usual. I think people were really into the markets this week, despite typically how it ended. But how it typically ended here was a lot of profit taking and people just not being in the market, which would have translated to a stronger dollar there. So a little pressure on the dollar to start the week, and it definitely pushed up. Now, what I'm anticipating probably for this week, probably better than expected for CPI. I expect that to still be elevated. I expect the producer price to be elevated, and I do expect maybe we'll get a rally on Friday due to softer numbers for retail. So I think the CPI will be still higher. We'll probably still see a good number for unemployment claims on Thursday, and then we'll probably see a real risk on sentiment for Friday. Now, we'll tell you, we could see a risk off sentiment on Friday if the numbers are too bad and a lot of these stocks tank, right? Because then people will be running to dollars, not stocks. And stocks are just a riskier asset, right? So we'll have to see how that plays out. I'm kind of 50-50 on the week. Can't really give you a total definitive price target for euro/US dollar. Right now, overall, we do have a upward trend on this pair on the 4-hour and 1-day chart, but I'm definitely, we could definitely see a pullback. The 1 hour is not looking that great, so we're probably going to have somewhat of a pullback this week. It's probably necessary to kind of balance out the WTI situation from the BRICS situation, as well as certain headline risks that will become more in focus as time goes on. So we could see a pullback. We had a huge run up, guys, even for this last week. I mean, the dollar definitely lost a little bit of steam there, probably about 1.5 cents on the euro/US dollar. So we'll see how that plays out. I can't really give you a certain forecast on that, just because we are in a pausing period. We're not in a hiking or accommodative period, so I don't really know how that's going to fare given the market data. Everything will be data dependent at this point, because we'll need to see how it looks, because as we get closer to that May meeting, that will be important as well too. So we're just going to play it day by day, update by update when I drop them, and then obviously on my Patreon I'll be giving certain signals, probably what is happening on the day by day basis, and then we'll go from there. But let's get you guys now over to XAU/US dollar, gold/US dollar. Let's see what happened for the week and the week ahead. Kind of ended at 2011, guys, as you guys can see here, and that is a very ironic number there. Back in 2011 is when we breached the 2000 the 2000 levels, so it's kind of symbolic there. The 1 hour and 4 hour chart definitely looking still very bullish, guys. I think this guy has a lot of room to run. Price targets will probably be over on Patreon, but a lot going on, guys. Definitely we lost the steam there, and this correlate, definitely a lot to, cable/US dollar, as well as the euro/US dollar, as well as the Canadian dollar and Japanese yen. This definitely positively correlated there. We definitely shot up a little bit there. Was hanging our neck above the 2030 mark, but then we definitely pulled back there with that risk off sentiment, and then obviously we had that strange pullback that happened on Thursday. I actually lost some money there based upon how the number was being released, and it was worse than expected, and then we pulled back. So again, guys, I do trade on my demo accounts on the weeks that I wouldn't actually be trading, just to make sure that I'm kind of still sharpening my pencil like I told you guys before. So make sure you're doing the same as well, doing your due diligence, staying sharp, being ready, setting your trades. Make sure you're always in rhythm, guys, despite what's going on, because you never know when you would have to be in, or you might identify an opportunity on a time when you wouldn't typically see that. We do have this geopolitical situation in the background between China and the U.S. and Taiwan. We still have the situation in Europe, right? So those will definitely keep the VIX at play, probably keep the VIX around the 19 to 25 mark range between there. We like to see the VIX below 20, guys. I know a few of my friends have made a little money on the VIX as well too, guys. But yeah, where I see this guy going, 1 hour, 4 hours, still looking bullish, guys. where it'll cap out, it will cap out possibly at some point. It just depends. Futures are still looking pretty far out there on the buy dated ones. So definitely bullish on this, guys. This as well as silver, US dollar. What price targets will be probably over on Patreon. Take a look at that. We'll be doing daily updates as well too. But all in all, guys, I still see bullish here. Let's get you guys now with the WTI/US dollars. I'll tell you about the week ahead, the week that just passed, and the week ahead. WTI started the week off at that gap up, as we would call it, even though it happened like right at open. It was still essentially a gap up, because you would have literally had to have been there, had placed a buy limit right away, or a buy stop, depending on how you wanted to look at that, and then you would have got into there. But we basically had a flag here, kind of stayed at that mark, and then we pulled back again, guys. It's value in the US dollar, so it definitely did correlate to the other assets there. Where I see this guy going, pretty bullish on this as well too, although this is a very volatile pair, especially with everything going on, the tug of war between inventories and what the BRICS might be doing, BRICS nations might be doing. So it's a lot going on, guys. It's too much going on for me to really gauge it, so I don't really trade it a lot. I mean, you can look at some of these candlesticks, they could range from 80, 34 all the way down to 79, 60. So, and depending on, for my contract for differences broker, it's like $10 a cent. So you definitely would have to adjust your risk accordingly, and it is very volatile, especially in a trading day. It can span quite a lot, and it's kind of unpredictable. That's why I don't trade it, guys. But all in all, guys, I definitely see this guy bullish as well too, unless we have those numbers being worse than expected, or people taking risk off the table. Probably we'll put some price targets again for that later in the week on the Patreon as well, guys. Get on over there, spend the $5, $25, so you can gain a better understanding as to what's going on in the markets. Let's get you guys now over to cryptos. BTC/US dollar held its own for the week. We'll talk about it. So despite a lot of a huge sell-off that happened a little bit to start the week last week, even though we had the slight run-up, it was kind of consolidating, just holding in this pattern here. But on the week there, on the 4 hour, I don't know why. Yeah, so basically on the week there, it did pull back a little bit, kind of stayed the same at about the 28.7 handle, and then it pulled back a little bit about the 28 handle. That's a psychological level, guys. I probably don't think it'll go much above that unless something crazy happened. Doge had its moment, vis-a-vis Elon Musk. He definitely, jawboned that guy up a little bit, and then posted the Shiba Inu, which is kind of crazy. But we will take a look at that, guys, a little bit more specifically, probably later on the Wednesday video. But where I see this guy probably still having a little bit of a bid, but that consolidated period, guys, would lead me to believe that we might have a little bit of a sell-off. And again, guys, you guys know my philosophy. If it's staying sideways for too long, it's most likely going down. Again, I made a nice little profit off this guy a few weeks ago. I would have probably posted to my Patreon, but still trying to formulate how exactly that's going to look to provide you guys a value via that program. So let's get you guys now over to the dollar index. Got a few things to talk about there. So dollar index overall was pretty crazy on the week. We started out, we go on the weekly here, back here. Started out at the 102 level. We did lose a lot of steam for the first couple of days there, and then we just kind of slowly crept our way back up to the 102 handle. So overall, we did lose about almost $1 or one on the dollar index overall. I just call that basically a flat week. And that typically is what happened. You get a couple nice trading days in there, and then we kind of taper off for Wednesday all the way up to Friday, right? Good Friday. So that's why I told you guys I just kept capital on the side. But we are officially in quarter 3, guys. Quarter three is underway. Fresh capital is in the markets. We pretty much got a nice little stint of about 30 to 90 days. I want to say 60 to 90 days of just pure trading, guys. Nothing really anyway until, we get to, the 4th of July. But July is even pretty good. The famous saying, sell in May and go away, is kind of works for stocks per se, but not for everything else. Not for Forex, commodities, ETFs, futures. That doesn't work for those. It basically is just for stocks. Everything else will still be volatile, still be liquid, and still have good trading opportunities. Where I see this guy going for the week, probably picking up a little bit of itself off the ground, probably trying to get up to that 103 again, with those better than expected numbers since the bar is so low. And then maybe shaving off a little bit for Friday if we get those worse than expected numbers, and probably risk settlement might be on. But again, we are still looking at a possible hike for May. That is very important. I think that we will get that hike again, that 25 basis points. I just feel like the Fed has its back against the wall and it doesn't have a choice. Will I think it do stealth QE like how I showed you that B-52 bomber? Absolutely. I still think we're going to be doing stealth QE for those cracks that do show up. But all in all, guys, overall, as a monetary whole, no, they will keep the rates elevated for longer for sure, guys. They will not probably be doing any emergency cuts until they get this situation under control. Because as you guys can see here, the pressure is on, guys. The pressure on the cap is on. Gold and silver are trying to, trying to take off with that coil spring approach, and then we got WTI above the what I call psychological level for $80 a barrel, because that means overall gas, could be anywhere between $3 and $4. So, yeah, guys, it's very pivotal. Definitely think they're gonna do what they can. Let's get you guys now over to the stock market. I got a few things to talk about there. So guys, as you guys can see here, pretty much we had the last recorded futures are up a little bit, but the stocks virtually had a pretty decent week overall, guys, even though we had a little bit of a sell-off here and there. But the VIX is underneath that 20, and we have the NASDAQ still hanging its head above the 12, the 41 for S&P, and then the Dow at 33, guys. Again, guys, right now we are in a pure consolidated pattern between all of these three. The ones obviously that's doing the best is obviously the NASDAQ on a percentage basis, but tech stocks are definitely getting their feet up underneath them. Only one that I'm really bearish on overall is probably Tesla. I will probably post some targets on that as well for the trading week on my Patreon, so please head on over there. I'll show you guys once again. Please click the join to support the page here, and that's just generally supporting the page. I do appreciate it. And then for the home page, click the Patreon and then go to the different links and then choose which one you want, via your strategy as well too. But all in all, guys, yeah, how I see this kind of being the same for the week ahead. Possibly a pullback, but again, guys, they don't let it pull back. I mean, a pullback of 0.03% or or 1% on the Dow is nothing compared to how tall the number is, 33,000. 1% on that, a 300, pullback is absolutely nothing. So I definitely think these guys are still going to be in that holding pattern until we get some type of catalyst of whether an emergency rate cut, we keep hiking until these earnings of these guys and EPS numbers kind of take a deteriorated turn. But all in all, guys, I expect those guys to be the same. Let's check out the bonds as well too, guys. Bonds are still for the most part generally inverted, although we kind of had the yields rising for the last 2 or 3 trading days, which means that, and then that obviously coincided with the dollar being stronger as well too. People are not kind of bidding that down. So overall, guys, we are seeing definitely some crazy moments here. We got that 5 handle and 4.9 on the 6 months, so that's definitely where they probably see it being. Overall, we also got that 2-year, and that 2-year is kind of that pivotal point there at that 4 mark. So I expect we're probably going to stay, and then again the 4 to 6 there, we're probably going to stay at that 5. But again, guys, that 5.25 is another psychological level, because we typically do not go higher than that, and I think that's probably where we're going to cap out, and that pretty much is the May meeting. After that, who knows? I've seen some forecasts saying that we're probably going to have an emergency cut as of July or August. We'll see, guys. I don't look, guys. I am a speculator of all things, but I'm a trader, number one. Investor as well, but that's kind of the backdrop. That's kind of in the background. I am a day-to-day trader. I make more money during that than I do obviously investing. Right now it's been so turbulent that you definitely want to see a return on your money right away, because the money is losing value. You need to hold things. We also got a couple of sponsorships that we'll be promoting pretty soon here shortly, so you'll take a look at those. Definitely look at those as well too. Guys, I'll probably leave it there for the week ahead. Kind of see a stronger dollar probably overall, just due to the numbers probably being better than expected. And we kind of need a little bit of healthy pullback here. We kind of had that we're getting towards that 100 level for the dollar index. I don't think they want to breach that just due to everything going on, so we might have a little bit of a pull up there. I'll let you guys know via my Patreon on day-by-day basis of what I see happening for the I trade typically during the Asian session as well as the tail end of the UK or Euro slash US session, so I'll let you guys know what's going on there. But I appreciate you guys joining me. Please like, comment, share, subscribe, and as always, in order to be profitable, one must have the knowledge and insight about the next trader position to. You guys know, stay ahead of the curve, guys. Appreciate you. Please get on over to the Patreon. Please join the channel as well too. Please tell your friends about it. Like, comment, share, subscribe, and I will see you guys on the Wednesday video after a whole bunch of data as well as that Canadian interest rate decision. Happy trading.